Hi, Kevin, Patrick, Fernando, Ethan, Dominic, how are you? Melvin, Tan, Quang, Yang. Nice to meet you. I don't think it will. It would be too convenient for it to go to the neckline right away. Andy, how are you? Let's have a great week. Everyone ready to have a good week? Okay, Kareem. So the question is, do we get back to the neckline to make a convenient short for people that missed the break in the euro? I don't think that we do that. In fact, I think that this first rally will fail. I have some ideas, though, that in the dollar, that this big move that we've had up here, I don't think it's over either. I think we can make a move up above these highs to 95.50. And then I expect a better correction back towards 93, 92 to correct this pretty parabolic advance that we had, or at least very directional advance that we had last week. Everyone give me a Y if you're following what I'm saying. So before we have a rally in the euro, before we have a correction in the dollar, I'm looking for another move to the upside. May start from here, maybe a little deeper, but I just don't think that we're there yet. Okay. So looking at USD CAD, I know some people are trying to top pick this. I have a hard time top picking it here. We have, what kind of high is this? Pretty extreme reading, up around 75, confirm the high. So I think there's a chance we even take this out, the 29 level, make a new high. I'm hearing numbers like 131 bandied about before we get a better correction. So my feeling going into Monday, and you guys know I look forward to follow through from what we had last week. We had a strong dollar, so even though we pulled back a little bit, I'm expecting some follow through between today and tomorrow before I would look to fade dollar strength. So Friday, hope you guys caught part of the yen scalp from after GDP. And sometimes some of my best ideas happen after news. You know, I love to fade news. It doesn't always work, but it worked Friday. So I really haven't even had a chance, and I'd have more clarity, as would you, if you had access to the traffic light page. Greg is putting out a bunch of new work here today. You may want to consider signing up, since we are in some potential terminal moves occurring across different pairs. And, you know, just for an example, Euro Yen was a big break. We had a big break last week in Euro Yen. So let's see where Greg is at now on this Euro Yen. Okay, so he's looking for a little bit deeper here, and then a pretty good rally, actually. C is at new highs, so eventually looking for this double top to be taken out. That could be a big trade here. So I was thinking that we'd get at least a rally here in Euro Yen, but so if we break and we start getting some divergences under last week's low, because I've looked at Greg's count here, and if I want to look for some confluence here, I could always go to Nick, see what Nick's saying here. See if there's a harmonic look from Nick. I know there's a basic technical look. Okay, look, went right to a channel line. This is Blake's work and Steve's work here. Okay, coming all the way back down to check the major breakout of a downtrend here. So,
hey Dale, that was actually, yeah, that we actually broke through that. That was like intraday analysis from Friday, and we don't remove.
Oh, okay.
Yeah, we don't remove those. We don't remove the analysis unless we remove the day.
Okay. Shows you how sharp I am today. Okay, so thanks for calling my attention to it.
No. So if you just go over to the daily chart, you can go over to the daily chart, and then you can see those. That's that's like a newer like update. Yeah.
Okay. Yeah, we're right there. Okay. So yeah, we're good or bad from here. I don't know what to do with it. So
It's
Blake,
it's a tricky
I
area.
come in, huh?
I said it's a tricky area because the problem with the euro yen is obviously risk appetite still very strong. So this 131.70 is huge. I mean, it's enormous.
Yeah, and I think even if we are going to higher targets in the dollar, that there'll be an interruption in this move in the dollar in the next, sometime this week, and get a pullback in the dollar. So that's my main thesis coming into this week, that even if the dollar has higher to go, I don't think it'll do it in a straight line. And I wouldn't be surprised to see some type of peak in the Dixie around 95.5, and it could be a pretty good pullback. In fact, especially if it happens on the back of some type of news out of Congress. I'm not talking about indictments. I'm talking about maybe some movement on the tax plan. So I'd be looking for about 95.5, and then, I think we could pull back to 92.5 or something like that, maybe even check the breakout. So that's kind of where my head's at going into this week.
That makes sense.
Besides that, it's an empty shell.
Well, we've got a lot going on this week. I mean, it's a huge week. It is.
NFP, Halloween, everything.
Yeah. It's NFP. We have central banks meeting today. We have the Bank of England, or not today. The Bank of England meeting this week. The Fed meeting this week. I mean, it's a busy week.
So I also missed your look at the week ahead.
Oh, so, you got it. It's a 15-minute short video, which will really, I think gives a really good update. I hope people enjoy it. Yeah.
Yeah. So if you want to take over, it sounds like you have some things crystallized that you want to share with Base this morning.
Sure. I mean, I'd be more than happy to. And by the way, you know what I should do? Let me do this. Let me take over really quick and just make sure everybody knows.
Earlier in my career, Blake, I'd come in on a day like this and pretend I knew, because I had a hard time admitting, saying, well, I don't know. They say, Dale, what do you think? I don't know. So I would pretend I knew. And it took many years for me to realize, to serve the community, I'm much better off boring them than misleading them.
Sorry about that, Dale. I'm sorry, I missed what you said. I was sending out our link just because I think we always have a problem this time of year, this 1 week, because we make the adjustment, or Europe makes the adjustment.
Oh, the time changes.
Time change, just like for a week, it's before we change, and so a lot of people end up missing the webinar for the week, and our attendance is always light, and everybody come like towards Thursday or Friday, everybody's like, oh, I've been missing the webinar all week. I was wondering when it was, and so I had to make sure I tweeted out the link and make sure.
Okay, and we go dark next weekend. So
yes, next weekend is great, because that for me is I get to sleep an extra hour. I know, sorry, I get to sleep an extra hour.
I'm moving, man. You better set up a pup tent in your backyard.
All right.
So sleep an extra hour.
There you go. Right. Hey, the weather's nice now. So a couple of updates, just really quick. If you guys are long, like the Aussie New Zealand or the Pound New Zealand, these are patterns in play that we put on, the 19th, so almost 2 weeks ago. Aussie New Zealand hasn't really moved anywhere. We're basically where we started, and the Pound New Zealand is still really strong. I took some of my Aussie New Zealand and Pound New Zealand off the table today. Now, some of my traders are like, hey, Blake, are you selling? I'm like, no, I'm just taking profits on some, and I'll add them back in a little bit later, because this week's going to be a really big week. And I want to give you an example of like Aussie New Zealand. Let's just start there. First of all, it's basically still where, you know, the breakout point. We've got this nice little flag pattern that's trying to break. The problem that the Aussie has right now is that the Australian government, because of they lost a parliament member that's got dual citizenship between Australia and New Zealand. I can't remember his name, but anyway, they've got to replace another parliament member because his seat. But there's politicians that already said that you know, in the case of a no confidence vote, they'll still, you know, back the current government, Turnbull, and then which is fine, but it's still, there's still some questions. So the Aussie, you know, last week came under a little bit of pressure last week, and some of the data wasn't as great. So the Aussie New Zealand's basically stationary. I took some of the position off the table. I'm really still looking for, personally, I'm still looking for a move. I was looking for a move to this 38% retracement on Friday, and we got it. Because we bounced from there overnight, we bounced back above 112. I took some off the table just to reduce my position size, and I can always add back in, but I still want to be long down here. So I don't mind having a position. I just want to, I'm going to try to get a little bit better. I'm trying to get cute, if you will, with my positions, instead of, if I can bring my cost average down just a little bit, because I'm still bullish. I still think we're going higher. I just wanted to, you know, try to get a little bit better position size, you know, for this whole thing. Anyway, so I took some of my Aussie New Zealand off just so I can try to add back a little cheaper. And then the pound New Zealand, I mean, when you have, well, first of all, we respected on Friday the breakout point, which was, this is really important. This is a important test on Friday. You can see this breakout point right here, this blue line. Yeah. That's the cup and handle. See how, I mean, I started buying this thing at 188, I think. Yeah. Like 187.25. I think by my cost average ended up being 188 because I was buying all through here. So, but I took some off the table last night when we bounced above 192. So, because we did a successful retest, and last night we were back at 192. This is an Asian trade last night. We got up here, and I said, okay, I'm going to go ahead and take some off the table. So I did. I took a little bit of profits over here, and I'm going to try to add back this Aussie New Zealand somewhere down here again. So I still want to be long. I just want to be long at a little bit cheaper price, a little bit better price. So I'm just trying to get my cost averages, you know, take some profits, bring my cost average back on some of these. So that's what I'm doing with like current positions, just so everybody, you know, everybody who uses ForexAnalytix kind of knows what where my thought process is. Now, let's go into like what's happening currently. So the euro US dollar, okay, we have this big head and shoulder pattern. Now, the problem with the euro dollar is the euro's weak. I mean, the euro's weak against a lot of things. I mean, you look at a lot of crosses, and I can go into those here in a few minutes, but as long as the euro dollar trades below 117, roughly, I don't think there's any reason to be long. The question is, are we going to bounce up to 116.70 to 117? I don't know. You know, I don't know if we're gonna be able to bounce all the way back there. I'm hoping we can, but I don't know if that is gonna happen. Because what I'd like to do, like if I take the euro, I'd like to be a seller up here if I can get it. I just don't know if we're gonna get it today. You know, because the euro is pretty weak all around, and like I said, if you take a look at a lot of these currencies, I mean, like the euro pound, the euro pound, for example, is probing a trend line from, you know, 2015. Nice look. Yeah, I mean, we're probing it now. I mean, it doesn't mean it's going to break down. But we are really, you know, skirting that really key key support, and I think the euro pound is at risk of breaking lower, and I think we got to get a good move below 88 pence to really you know, expose the downside. And then, you know, obviously there's a 200-day moving average around 88.70 or 87.70 or whatever. But the only way that the euro pound is really going to forcefully break down this week is with the Bank of England on Thursday. Sorry, Monday. I got the Monday yawn, so excuse me if I just made you guys yawn. The problem with the Bank of England is that a lot of traders don't believe that the Bank of England is going to raise rates. I do believe that they are going to raise rates, but if a lot of traders believe it's just going to be a dovish hike, you know, I've got to believe, okay, and Stelios can jump in and I'm sure he's got some thoughts about this as well. Hey, wait, hold on before you say anything. Hey, Stelios, good morning. Hey. The Bank of England, their rates are at emergency levels, as Stelios has pointed out so many times. Look, I don't know if anybody else feels this way, but Brexit is not a, you know, walk in the park for the Bank of England. The Bank of England doesn't have many tools in their toolbox if things go awry in the next couple of years with growth. You know, they just don't have. I mean, what kind of you're already employing emergency measures. How much further can you go? And if you're the Bank of England, I would think that you have to take advantage of the decent data and we've got a lot of PMIs that are even coming out this week in England or in the UK, excuse me. But you've got to take into account that we're going through a Brexit process that could really negatively affect the UK or the UK economy going forward for the next couple of years. And as the Bank of England, what kind of tools do you have? Don't you use this time through negotiations, through a period where we're seeing a little bit, you know, higher global inflationary pressures, and you see every other central bank trying to tighten policy a little bit? Don't you jump on that bandwagon just in case something goes wrong over the next few years? What do you say, Stelios? I mean, so everybody thinks, oh, this is going to be a dovish hike from the Bank of England. Hell, if I was the Bank of England, I'd ratchet up rates at least another %, just so I have some wiggle room.
You know, Blake, you're absolutely right, and I think Dale said that in the past about the Fed as well. You know, the hiking just so that they have some ammunition.
Of course, yeah.
And you mentioned inflation, and okay, we know it's because of the depreciating currency, but the mandate for the Bank of England is to keep inflation at or near 2%, and we are 3% and rising. So this is their chance, like you said, to do something, to hike a couple of times, 2, 3, 4 times. I know the economy is not, you know, is not powering ahead, but it's not like people say, oh, the housing market's going to collapse if you raise rates. No, you know, 25, 50, 75 basis points. It's not going to do anything, in my opinion. You know, in the grand scheme of things, like in the U.S., they've hiked 4 times. You know, has the housing market crashed? No. So I'm with you on that. I think I'm long the pound, by the way, against Kiwi mainly, and I think that they're going to surprise and they're going to take this opportunity. They're going to reverse the August cut, which was, in my opinion, ridiculous, and now that they still have not, you know, stellar data, but it's still okay.
It's
and
not
they have
bad.
No, and employment is at all-time highs or near all-time highs. So inflation is high, employment is good. So, you know, you can't have it. If everything was perfect, well, we wouldn't be at 0.25%, right? This is supposed to be, like you said, emergency measures, and it's been nearly 10 years now. So, in my opinion, they have to do something. They're going to probably signal, they're going to be a little bit cautious, but I don't think they're going to be as dovish as everybody thinks. They're going to signal that we start with this, and we see how it goes, and it's not going to be, you know, it's not necessarily the end of it. So
Okay, and I was, we're talking inflation, and you had mentioned UK inflation is running near 3%. This is a chart of Brent, and now you guys already know what crude looks like, WTI, West Texas, intermediate crude. I mean, look at crude, look at Brent, and tell me inflation isn't going to come, knocking at our doorstep here in the next, few months.
We broke out, and WTI broke out too, partner.
Yeah, to WTI, you got Brent. Brent's making a move. This is. If I was the Bank of England, I'd be ratcheting up rates quick. Yeah, and Stella, as you remember, and I'm sure Dale, you do too. When the Bank of England would move rates at a half a basis point pretty regularly.
They used to lead us.
Yeah, the Bank of England was back in the mid or early 2000s
during ancient times.
but I look at the cable, and it's like, and I've got obviously some pound US dollar or pound New Zealand longs, but I'm also shorting the euro pound because you take into what had happened last week, and then you've got this, and I clearly pointed this out in the video this weekend. Not only do we have a double top, we have a false breakout up at these highs, which is eventually going to lead to a breakdown, in my opinion. And I think the euro pound is a place to play, especially if the Bank of England is they don't give us a dovish hike. They give us a hike, and they leave the door open for future rate hikes, Stelios. And I know you're a euro pound bear.
Yeah, and also the other thing to say is that if they hike once, what is that going to do to inflation? What is that going to do to the currency? It's not really going to get much traction, and they know that. They know historically how inflation follows rates and how growth follows rates and all that. So I think they're going to do it. And you guys, the people who listen to our webinar, they will know. You talked about oil before. From when it was in for like $40, $41, I was always saying, I think we're going to see 60 before year end.
I was not believing you, by the way. Of all people, did not believe you. I'm like, no friggin' way. But
Estelle, does cable? It used to get a bump from firmer energy prices because of the North Sea oil, etc. It used to. Be considered a bit of a petrocurrency.
Yeah, you're right. Nowadays, there's so many other things that are, influencing the pound. But yeah, you're right. So, and like Blake very correctly said, oil filters through everywhere. The higher oil prices, even a 5% rise, for a prolonged period, you will see it, because everything, industry, everything, they get affected by that. So they know that. And they can see that oil's gone up 10% in the last, 2-3 months, whatever it is, and they're going to take note. So that's my humble opinion. And one last thing, the other thing to note is that the market is pricing roughly 80% chance of a hike on Thursday, and one more for the whole of 2018. So we're pricing under two hikes until the end of next year. I think that only has risks to the upside. I know I'm probably the minority, but that's my opinion.
So is that how cable gets to 140 handles still? How else could it get to 140?
I think 140 is probably a little. I think it's probably a little aggressive, but wouldn't it would probably take us to maybe the mid 130s, maybe the 134, 135 level.
Yeah. Okay. You mean after Thursday's announcement?
After Thursday's announcement, we could So I've been following. When you're talking about the cable, I've been following this big triangle formation, really. But it's the rubber meets the road when we get to about 135. Once we get to 135, that's when we can start talking about, do we go to 140? Do we go to 138? Because then we got to figure out why we're there. Like, okay, we're at 135 now, but maybe the Bank of England did signal that maybe people are starting to price in, maybe 2 rate hikes or maybe 3 going into 2018, and then that's when you start talking about 140 and above. So it really depends on how we get there and why we're there. But I do believe that we're in the middle of this. You see this big. We pivoted off this last week. We pivoted off the lower end or close to the lower end of this triangle, and we're in the middle of the triangle right now. And if we get to 135, I'm going to start asking those questions like, do we get to 140, and how do we get there, and what's the catalyst? So anyway, Stelios, thank you very much for your input. I know you're going to talk a little bit more when Steve comes on, but thank you for that. There's something else that I want to cover regarding the euro, because we were talking about how the euro is so weak. The euro yen, and I'm going to be the first one to admit I traded this like crap. So I was short pretty aggressively 2 weeks ago down here at 132. I was looking for the break 2 weeks ago. So here, not last week, but down here. And I was pretty aggressively short. And when we came up towards 133, hit my stops, and and I think I was short, if I'm not mistaken, like 132.50. But I had a pretty aggressive position, and I got stopped out when we went above the 618. So I was irritated because I was looking for the break, but and you can see I have alarm set for the break. But if we break through this support here, we have a big double top forming, big double top. Now, it's hard for me to envision that the euro yen is going to break down without equities. And we look at the Nikkei, we look at the S&P, we look at the NASDAQ, we look at the Dow. Everything is just in rally mode. Obviously today we're, it's succumbed to a little bit of, selling, but all in all, the markets are extremely bullish, and it's hard for me to see the euro yen break down without the stock market. But I think it is something we have to keep an eye on, because if the stock market, let's say, and Dale, I'm gonna tell you, and I want to tell everybody else here, I'm the first one to admit that I think we're going to get a blow off top at some point, right?
Yeah.
But I also have the feeling that everybody else thinks there's going to be a blow off top too, because when I talk to the guys in my office, and and everybody's very well connected into equities, everybody says the same thing, and I know you guys have heard me say this before. Everybody knows the day of reckoning is coming. We just don't know when it is, and no one's trading it. Everybody's just trading, bullish, buying equities because you have no other choice. You just keep chasing yield, but that the end will come at some point. But everybody's now kind of thinking, all right, well, at some point the market's just going to blow off the top, and then we'll know that the reversal's coming. How about if it never comes? How about if we if you look at the S&P, how about if we just hit this channel resistance right here? We start to fall, and we come back down and challenge support down here, and then there's a catalyst that actually breaks us down. It's like,
how about we've already had one from last November? Since the election,
Well, yeah, but that was right there.
Right.
But how about if it just kind of just reverses? That could very easily happen too. But anyway, I guess
you could have distribution tops that do not have that final, 50 handle up, 40 handle down reversal day.
No, I'm hoping for that day. God, it's like any day, because I know whenever we have that blow off top, if we have it, it'll produce a lot of two-way action after that. So that's, for me as a trader, and for those of you guys that are listening in, I'm assuming everybody here is a trader. Yes, you might be an investor. You have you have retirement accounts that are set up. You're invested in stocks. You have long-term positions. Yes, I understand that. But most of us here that are listening and trading the markets, we are. Oops, wait, hold on. We got data coming out. Sorry, I'm gonna just durable goods orders. No, personal spending, PCE, stand by. Sorry about that. I forgot that data is coming out. Hold on. Here we go. And it looks slightly weaker, maybe. I'm just looking at price action here.
As expected, Blake, 1.3 versus 1.3.
Thank you. So it looks like the yen's actually gaining a little bit of strength. Interesting. All right. Well, okay. Not a whole lot to write over. Yeah, it's very temporary. not a whole lot going on here. Okay, because it was in line, as Steve said. Thanks, Steve, and good morning. So
Good morning.
one last point I'm going to make, and I'm going to pass it over to Steve because I got to get ready for my trading day, is that oh shoot. Sorry, I didn't mean to say that. What were we talking about again? I just lost my train of thought. Oh, blow off top. Okay, so I was saying I hope we get a blow off top, because I know that once we get a blow off top, if we get it, it will produce two-way price action, meaning we will not only have these relentless up days, we're going to have down days too. And when we have two-way price action, big up days, big down days, it gives us all opportunity as traders to make money. And because I make money in volatility, when we have volatility at 15, 20 is a good market. I mean, it's a good trading market when we're trading in these types of volatility, up in the teens, in the 20s. When we're subdued at 10 volatility, at a 10 vol market, it's tough. It's a tough market for everybody, because you just get this grinding cessation and you just don't, it's like, okay, well, the market's up again and I can't, really buy stocks up here, and I can't buy risk up here, but I don't want to short it. And so everybody's kind of stuck. If we get a blow off top where the market goes up and down, then we start getting two-way action. Volatility picks up, and then when volatility picks up, we start, as traders, we can really capitalize on it. So anyway, I'm hoping, but I'm not, I'm hoping it happens, and anyway, that's that. So Steve, how are you doing this weekend? Or how's your weekend?
If it was still a weekend, I would be doing even better.
So I took this is my oldest son. He's 13. Actually turned 13 a couple months ago, but we never had a birthday party for him. So I took him, my wife, and I took him and 10 kids to play at laser tag, one of the biggest laser tag places in the United States. And the kids had a great time, but man, I'll tell you, and then we took them out for pizza, and dragging these kids around all yesterday. I'm tired. I need a weekend again. I need another weekend. I'm done. I'm finished. Stick a fork in me.
I truly believe
yeah.
I'm trying to entertain an 18-month-old, during the weekends, and it still feels too much. I can't imagine like a bunch of 10 kids or whatever.
No, I'll tell you though. Once the kids are, the kids were ranging from 10 to 13, and once they get above 8 or so, they're really much more manageable, and it was fun. I mean, the worst part was being in a 7-passenger vehicle with 6 other boys that they don't know about. They don't understand the body odor effect yet, so that was the biggest issue. So anyway, yeah, I'm like, you kids need to wear some deodorant. Do you guys understand? Your voices are changing. You're starting to grow hairs where you should be growing hairs, and your armpits stink. So anyway, it's puberty, I'll tell you. All right, Steve, I'm going to pass over to you. You guys, good luck today. Have a great Monday. Thanks everybody for being here, and I hope you enjoy the rest of today's webinar. Dale, do you have a good guest for today?
I do.
Awesome.
I'm hoping he shows.
Okay.
Evangelist Margitas, and I hope that the European time change hasn't screwed it up, but we'll see.
All right. Well, you have a great. Have a great webinar, and yeah, all the Europeans end up popping in about 25 minutes from now. So
okay.
as most of them are not
waiting to hear analysis, and they'll come at the interview part.
That happens every year with.
Yeah, to be honest, I can't understand why Europeans and Americans can't agree to to a common date.
When was it? When was it? And I want to say, and somebody can correct me if I'm wrong, but it was during the Bush administration where we made this adjustment, and it was the United States that actually made the adjustment, like 2 weeks difference, because we used to do our time change the same day as Europe, and then we made that adjustment. Somebody can correct me if I'm wrong, but I think it only happened like 10 years ago or so. It
doesn't make much sense. Yeah.
No, it doesn't, and it really irritated me too because of my sensitivity to time changes. Anyway, or maybe it happened during the Obama administration. I don't know, but whenever it happened, it really was.
You never change time in Arizona, right?
I don't, but it
It's
doesn't matter.
too complicated for zoning.
It is. We don't get the concept, and we're not that smart. So no, but the problem is that I adjust my schedule based on everybody else.
Of course.
So yeah, I'm the only one that's really affected in Arizona. No one else is. So anyway, you guys have a great day. Good trading session, and I'll talk to you guys tomorrow.
Thank you, mate. Bye-bye.
Bye-bye, guys.
Hi, Steve.
Hey, Dale. How have you been?
Good. Blake telling the story of his son. When I was 13, I had to stand in front of a congregation and say, "Today I am a man." And I looked at myself and I go, well, when am I going to start? When will puberty start already? Anyway.
I was a little bit scared at the point that you said, when am I going to start? Because I didn't know how you're going to fill in the sentence. But okay.
Well, I had friends in junior high. They were already men. And, it was, a little intimidating going into the showers after gym class. But go ahead, buddy. That's a little personal note.
Okay. By the way, I think Blake mentioned it as well. We are seeing a healthy rebound today in pound. Pound has been very strong since the open. We've already rebounded like 80 pips, which means that the triangle that we barely held on Friday, it was looking like the pound is going to break below this triangle, but close to the end of the day, it started paring back its losses and ended up closing just right on the support trend line, and today is bouncing once again. So the triangle interpretation still remains valid. We haven't had a break yet, so we haven't had any technical events happening here. So this is something to monitor. Obviously, this overperformance in comparison to the euro that has already broken below its technical pattern, which is the head and shoulders formation that we were monitoring for so long, is also what's leading to this move that we're seeing in the euro pound. In my opinion, the euro pound has already confirmed that it's moving lower. I think this can be interpreted as a 5-wave move, and I would expect roughly these areas to be tested, either the 61.8 of the move higher, or perhaps a little bit lower, which is this support zone. So I'm really looking towards there. So I think euro pound looks quite interesting. Of course, everything is going to be this move should complete, if indeed we're on the right side of the market here, should complete very, very soon with the BOE, because if we get a slightly more hawkish tone from the BOE, because as Stelios said, Blake said it as well, I also believe that the BOE is going to hike. So the question is not so much about if they're going to hike or not, although if they don't hike, it's going to be extremely dovish. So the pound is probably going to get decimated, but I don't think that's going to be the case. But I don't think that just by giving us one hike, is going to be enough to push the pound higher. The accompanying language is also going to play a very, very important role. Now, having to do with crude, if you remember, I kept on looking higher for crude since we bottomed out. And the area I'm looking now for resistance is the 55 area, not just because it's like a nice round number, but because I have a confluence of a triple confluence here, which is actually the high we had back in February. It's also the 161.8% extension of this last corrective move lower, and it's also the ascending channels resistance. So as you see, I've marked this area. This is a very nice area of confluence. So I think 55 is a very nice target, and a target that we should easily approach. I already deleted my previous analysis. If you remember, my previous analysis was showing I was looking for a move to 53 and 53 and a half. That already got completed. So now I'm looking for a move to 55 before potentially seeing a pullback, perhaps to test this high here or whatever else. But I think that crude remains constructive. Okay. So that's what I see with crude. By the way, whatever questions for things you want us to see, we already have some questions. I'm just saying, if you want me to look at something specific, just go ahead and use the chat and tell us about it. Before webinar start, what do you think EURUSD will do? Continue bearish or with bulls? I was looking to reach 116.85. Listen, I think Blake mentioned that as well. I think that now that we've broken below the head and shoulders formation, I think that any rally to 117 should be sold. Okay, so I think that after breaking below there, any rebound should be sold for a move down to 114.50. So that's what I think. Okay, I think that's quite clear, and that's exactly what I was saying even before we broke the head and shoulders formation. I was saying that any break should eventually lead to 114.50, and this hasn't changed. I mean, I still view it the same way. Let me see, we had another question as well. Aussie USD and Kiwi. Okay, different questions. Let's have a look at both of them. Okay, Aussie USD and Kiwi, it's very simple. The Aussie USD tagged on Friday before reversing the 61.8. Any rebound to 77.40 is a great opportunity to align yourself with the trend. That's what I think. I'm going to be a seller at 77.40. As simple as that. Are we even going to get there? I'm not sure, because I still believe that Aussie USD is moving lower, and I think that it's lagging the Kiwi, because if you see the look the Kiwi has already put in place, it's much stronger. The Kiwi, by the way, also rebounded from a very critical level on Friday. So both of them rebounded on Friday from very critical levels. The Aussie USD did that from the 61.8. The Kiwi did it from the 100% retracement. So actually from the lows that we had in May. I'm not even sure they will be strong enough to actually maintain this rebound and extend it somewhat. But if they do, I told you that 77.40 is the level to watch for resistance in the Aussie, and for the Kiwi the level to watch is 69.70. Okay, 0.6970. So I think that any move to 0.6970 is to be sold. As simple as that. So that's what I think about the Aussie and the Kiwi. Let me see what else we have. You'll break ahead of wine festival after a night of big, Zach says, and the kids wasn't down quicker than a big party weekend. Absolutely, I can agree with that, Zach. Lol, good, my son is just about to turn 2 years old. Yeah, mine roughly as well, a little bit younger than yours. Not sure, but things take more time in Europe. Too many governments, too many bureaucrats. Yes, although I don't think that would be a complicated change to align daylight saving time switch. Thoughts on USD CAD? Sure, let's have a look at it. And we're going to have a look at the USD NOK as well, by the way. Okay, the USD CAD, as long as the USD CAD remains above, I would say roughly 127.80, okay, then we have no reason to look lower until we reach 130. But if we do break below 127.80, I think we can be looking down to 126. Okay, so as long as we hold 127.80, you can look towards 130. At 130, we have the confluence of a horizontal support resistance area and the 200 DMA. So I think that the 130 level is going to be extremely critical. I consider it more important than the 50% fib that we had here, although we almost reached it on Friday before reversing. But for me, this area at 130, it's also a psychological level because it's a round number. It's the 200 DMA. It has been support and resistance in the near past. So as I told you, above 127.80, look for 130. Below 127.80, look for 126. Okay, as simple as that. And if 127.80 gets retested and just holds, I think that 130 is going to come quite easily. On the other hand, if we drop down to 126, depends on what happens from there. If we rebound from 126, then I would be looking for at least another retest of 127.80. So, you know, the USD CAD has very clearly defined levels, and I think that playing between the levels, especially for people that want to trade short term, is quite a good idea. Okay, it has been acting very nicely with support and resistance areas. Now let's have a look at the USD NOK. These markets are correlated with each other. So the USD NOK, oppositely from the USD CAD, did manage actually to reach the 50% fib. It actually extended a little bit higher before getting rejected. It also got overthrown from this ascending channel resistance. So although, you know, you can even redraw it like that, so it doesn't really matter so much. The issue is that if we get some type of a pullback from here, then look for the 8 area to provide support. As long as the 8 area is holding, somebody can also view this as an inverted head and shoulders formation, as you see. Okay, so if we technically look at it like that, then a measured target. I have already drawn it. So what am I doing? Measured target is at 830. We haven't reached that. Okay. So any type of pullback could produce then another move towards 830. And depends on how you draw this, it can even extend a little bit higher to 832, for example. And why does that matter? Because then it also coincides with the 61.8 of the move lower. It also coincides with these areas that held price action on the way down. As you see, we had 4 consecutive days that area held as support. We also had another 3 days that this area held as support there. So I think that this 832 area might act as a magnet if the USD, you know, remains strong in the following few days / weeks. So we might get all the way up to there before rolling over again. Okay, regardless, now that we've broken the critical 8 level, you know, I cannot tell you that it's an easy decision to be short until we break it to the downside once again. Okay, we are currently though at some type of a resistance, and Friday's candle is a reversal candle, so I would definitely not be buying here. So, you know, if you want to be a buyer, which isn't a bad idea, I mean, considering the technicals, I would wait for a pullback as close to 8 as possible. And then, as I told you, a very nice target is 832. We have a confluence of resistances there. Okay, that's it with USD NOK as well. No, I haven't covered Luca, Aussie, Kiwi. Also a question from Michael about copper. Last night bounced, but no clear bull signal. Do you agree? Let's have a look at copper since we're looking at these things, and then I'm going to talk about the Aussie Kiwi. I already talked about it Thursday or Friday it wasn't. I'm going to repeat again what I said because I think it's quite important. Okay, copper. Listen, I was expecting a pullback in copper as it happened, but you know, this move that we had is quite strong on Friday, and that a little bit scares me of a possibility of, you know, a deeper pullback. So although as I've said plenty of times, we've had a series of impulsive move higher and corrective move lowers in copper. Same thing happened here recently. I'm a little bit skeptical if this corrective move lower is over. It can be from a technical perspective. I mean, it can be an ABC, but I would like to see more confirmation. Okay, so for example, I would like to see a break above this area once again. Okay, if we break above this area once again, I think it's going to be confirmed, and then I'm going to be looking for new highs for sure. Until then, since we penetrated below this in quite an emphatic way, below this bull flag, I want to see a little bit more of price action, but definitely the medium term I remain bullish because the structure, as I said before, is a series of impulsive moves higher and corrective moves lower. Okay. Now, having to do with the Aussie Kiwi, what troubles me with the Aussie Kiwi is the fact that Aussie seems to be in need of some catch up with Kiwi, and if that is the case, which I think it's quite possible, this might lead to a short-term, at least, underperformance in the Aussie Kiwi. So a pullback to lower areas like 110.50, even 110.20 wouldn't really surprise me. I have no doubt that this move is looking a lot more like it's a corrective wedge than anything else. Okay, so I'm viewing the move lower as a corrective move. I'm not sure it's done though. Okay, so I'm inclined to look probably lower before higher once again. Also, the reversal in the Aussie Kiwi came from a very interesting and nice area because, as you see, it was the retest of this ascending channel's support, this time as resistance, and it was also the bottom of this resistance area. You can see how important it has been in the past, and actually, if I draw it even further back, you can see how critical this area has been, right? So I think the area that rejected the Aussie Kiwi is, an important area from a technical perspective. And, why not? We have been in a steady uptrend since June. Why not? We might get like a deeper pullback before higher. So I remain constructive in the medium term, but, I wouldn't be surprised if we get lower first before higher. USD Swiss, sure. Let's have a look at it. Okay, I had written in analysis plenty of times in the past that I expected a break above 97.70 to lead us to parity, which is exactly what happened. I mean, we broke above 97.50, 70, and it actually didn't take much time for us to go back to parity. Now, Friday's candle was a quite nice and large reversal candle. And that's what I had drawn like a few days ago, that perhaps we test parity, we pull back to 99, 98, 70, and then higher. I have no reason to believe otherwise. There is the alternative, of course, that if we remain like very, very strong in the short term, we might do, a stronger bullish price action would make the following difference. We might penetrate parity quite soon, then come back to retest parity instead of going one step lower, and then going for the next objective that's there at 1017. Okay, so depends on how strong this bullish leg is going to be. We either move lower from here, retest this area and higher, or penetrate through here fast, retest parity, then higher. So bottom line, as you see, in both scenarios, I remain bullish, but we need to see if we're first going to get a pullback from here, or in a few days' time before higher. It's secular move. USD CAD is ABC move from top, I think, Ron, it says, and let's have a look because he's put a chart here for us. Let's look at it. You mean ABC, right? Yes, but we haven't reached the target. And I don't think that the structure, okay, yeah, sorry. I don't think that the structure is also complete. I mean, this structure, this move, I don't think it's complete. So although I recognize that in the short term, USD CAD looks very, very strong, I'm inclined to believe that the downside of this C move, as you mentioned it, is not over yet. Okay, so I agree with you, and it might actually evolve to be an ABC, but I have serious doubts that C is done. William is asking natural gas chart. To be honest, I have no idea. Tell me a ticker, and I'll have a look at it for you. I'm never looking at gas. I've never traded it. I'm going to be honest with you. I'm trading like 55 different things, and I had looked at it. And, if you give me a ticker, I'm going to be more than glad to have a look at it for you. So just write a ticker for me, and I'm going to do some technical analysis on it. Pound yen, sure. Let's have a look at it until our friend answers to us. Okay, nothing has changed with pound yen. We broke out of this critical trend line. We came back to retest it. We're rebounding from there. And as long as this area holds, I'm inclined to look higher. And, I haven't seen something to change that for me. Of course, somebody can easily say, like, okay, wait a second, dude. Isn't this some type of a bear flag, for example? Yeah, okay, it might have been, but you know what I mean. If you get if you get like a serious breakout as we did here, and you come back to retest that area and you rebound from that area, statistically speaking, my first preference for an interpretation should be a bullish one and not a bearish one. So although I recognize that somebody would want to read this as a move lower, a corrective move higher, and another move lower coming, and that might as well be the case, as long as this area holds, I'm inclined to want to interpret it on a in a bullish way, and that's what that's what I'm doing in this case. If we break below this, let's call it a channel for now, we can think about it. Okay. CAD yen. Yeah, if the inverted head and shoulder is still valid. Yeah. That's a good question that I'm pretty sure that plenty of people have. The answer is barely, and depends on how you draw it. Okay. We're actually more or less testing that zone now. I mean, a move lower from there, I mean, towards or below 88, for example. No, actually changes this and makes this a false break of some kind. So we are more or less there at the moment, and if this inverted head and shoulders continuation, retest, and then move higher, interpretation needs to remain alive. It needs to do it ASAP. Any idea what DSI sentiment reading are for dollar after this run? Yeah, sure. Let me pull it up. Actually, let me have a look and I'll tell you immediately. There it is, 27th of the month. The last one that I have, let me find the dollar. Let me read you some interesting parts from it. S&P index 87, DSI with a maximum 100. NASDAQ 87, volatility index at 18. Dollar index 91. Whoa. Yeah, believe it or not, the DSI on dollar index is at 91 at the moment. It's actually, yeah. And the most stretched one of all, by the way, is Nikkei. Nikkei's DSI is currently at 93. I mean, any reading above 90 or below 10 is something that you extremely rarely see. So Nikkei is like as overextended as it can be from a sentiment standpoint. Let me see if I find anything else interesting in the DSI. I mean, any other extreme. Other extremes we find in commodities like wheat, which is at 10, lumber, which is at 90 at the moment, and having to do with Forex, I would say that the rest are decently balanced. Although I have to note here that the New Zealand dollar's DSI is at 13, which is very, very low. Australian dollar, on the other hand, is just at 38, which also shows that the potential for the Australian dollar to catch up is perhaps higher, and that's another reason why I would be a little bit careful with being long the Aussie Kiwi at current levels. Swiss francs DSI is at 10 as well, so the market is also extremely bearish in sentiment, at least. The Swiss franc extremely bearish. Mexican peso at 15, also extremely oversold. The rest seem rather balanced, more or less. Silver is at 46. I mean, I would expect it to be less. So, okay, this is a good update on the DSI. Ronit is showing his chart on USD Swiss. Let's have a look at it.
Steve, just a reminder, we have a guest, right? So.
He's not here in the room yet, so go ahead. I'll let you know, sorry. Steve. That's sorry, okay. Guys, thank you, Steph.
Okay. So important trend line tested here, a long-term trend line. Yes. Okay. Although I see two major points of reference. So, you know, for me to take it into account, we have to be rejected from here to have a third one. Otherwise, you know, it's too few points of reference for me to consider it. And this is a natural gas chart from our friend Ronit as well, because our friend asked. Εντάξει, ευχαριστώ γείτονος. What's the smallest time frame you care about? 4-hour chart, personally. NG27, let's have a look at NG27, which is the latest contract. Let me open it here. Let's have a look at it. It doesn't seem that TradingView has this. Let's see what it has. As suggestions, not gas USD. Okay, it's a CFD. Let's have a look at it. Oh, I can answer on natural gas very easily, actually. This is a triangle. Okay, and it remains to be seen how much it's going to extend, but definitely this is some consolidation given the prior move higher. I would say, I mean, it's very interesting actually, because it was a megaphone that became a triangle. I think people call it this a diamond as well. I mean, harmonics, etc. Extreme consolidation. I think it's very, very interesting. I mean, you can even see it from the 50 and the 200 DMA because they've completely converged with each other. Let's draw a fib as well from the highs up there to the lows down here. We didn't even retrace 50%. Okay. Okay, I think it's I think any breakout from either of these zones will produce an extended move. That's what I think. Until then, nothing to do here. I mean, I don't need to know anything having to do with the fundamentals of natural gas, because I can tell you as a fact that, you know, price first of all contains anything that matters from fundamentals, and second of all, I can tell you as a fact that this market is like so textbook in having to do with how much it's consolidating that there's not much to need to know here. It's very clear. We need a breakout, and probably after such a prolonged consolidation and the price action is coiling more and more, I think that any breakout from 315, higher from 315 or lower from 275 is going to produce an extended move, because all the people that have positions either way, just think about it. Let's say that you're bearish and you're waiting for a break lower. If you see a move above there, you're going to cover your position. That's going to trigger, higher move, a bigger move higher. Okay. Same drill if we're talking about a lower. So plus some people that want to commit to this market and they're just waiting. Like I just told you, they're going to be like, oh, finally, it's finally moving. Okay, it's time for me to sell, or it's time for me to buy. Yeah, it is.
Huh.
It is.
Interesting.
It is. It is, and it's a very rare formation, actually.
Yeah, but I know a guy, Renato Santos, I think, on Twitter, that's all he trades is diamonds. Yeah. There must be a lot of time between trades, because.
Yeah, just look at it. I mean, we've been in this diamond since June 2016, as you see.
Yeah.
Yeah, so I think it's quite clear what you need to do here. You need to be a little bit more patient. IBEX, bull flag in play. Let's have a look at it. To be honest, it doesn't really surprise me. Is it a bull flag? I mean, let me see its length in comparison. I'll tell you. Let me have a look. They don't have IBEX. How they call it in trading view? There it is. We can use the CFD. Okay. Yeah, it is a bull flag. It is a bull flag. And that's what we had drawn, actually. Last time somebody asked me to check for it, this is what I had said. We had this move higher, this move lower, and it looks like it wants to move higher. Where? Towards where? Towards there. Let me zoom out so you can see. Towards there. So yeah, I'm in total agreement with you. That's what I have on my chart. Yep, definitely. Do we have the guest here, or they got confused with the time? I'm guessing they got confused with the time.
No, he's loading it right now. So.
Oh, perfect.
He should be here shortly.
Perfect. I have more questions, by the way.
Okay,
about.
He's here.
Okay, give me a second because I forgot to.
Sure.
I had this previously. I had a question about Euro Kiwi. Euro Kiwi, nothing yet. It's correcting lower after testing this channel resistance. I think that this move lower can extend down to 167 roughly. But as long as we remain above there, it's bullish, as simple as that. Okay, but it can extend lower before higher. Okay, thank you very much, Dale, and see you all tomorrow.
Thank you, Steve.
Bye-bye.
Okay, Evangelos, I see you in the house. I'm going to make you the presenter so that we could hear your voice. And if you have anything you want to show us, there's a screen share option. Welcome to Face. You're now the presenter. So we had some time issues, I believe, some confusion about the time. Maybe it's because the Europeans have already changed times. There's Evangelos' charts, waiting to hear your voice.
Hello, Mr. Dale. How are you today?
Oh, great, buddy. Well, we see show business. You never know, but great to meet you.
Wait a second. He's Greek, right?
Yeah, I'm Greek, yeah. And I see you have a Greek accent as well. How are you today, my friend?
I'm good. Are you Greek or Cypriot?
You guys know each other?
Greek.
No,
yeah.
I just saw the name. Evangelos, yeah. Okay, I'm not going to say the last name, but I just saw the name, yeah.
Marietis, no problem, I can tell.
Yeah, okay.
So you guys could get together for a beer or something. So besides being Greek, What, I couldn't find much about you. You don't have, doesn't look like you have an axe to grind, or you have a service, or you teach
No.
people.
So I will tell you guys about me. So
Okay.
I actually moved in London like 1 year ago.
Okay.
My studies were about automotive engineering, but my hobby since the last 6 years is about stocks. I like to trade. I like to learn everything about forecasting. I'm very interested in the markets actually, because I see actually that everything is happening there. Yeah. So
Okay.
this
Okay.
is
So I'm sure you had a learning curve the last 6 years. Who influenced your trading? Did you have mentors? Were there books or courses you took, or you self-taught?
So I actually started by myself. So I was accidentally actually I saw a platform in the internet. So I said, oh, what is this? What is this about? So when I first looked at it at the first place, I saw the trend. So I saw the support and the resistance levels. So I said, like, wait a minute, what's going on in here? So I see there are ups and there are downs. So there must be happening something between those places. So I said, maybe this is the pattern. Maybe this is the way that the markets are actually working. So after that, I started, by time educating myself from videos, from, by actually observing the markets. So yeah, this is how it started.
Okay, a lot of people hit a lot of speed bumps between knowing things go up and down. There's a lot in between knowing a market can go up and a market could go down. So I'm looking at your setup here. Looks like you trade pretty naked, and you're a believer in rectangles and channel lines. So why don't you tell us what you use and how you use it?
So
and we're looking at the
I will tell you how I start any trade of mine. So at the beginning, I draw the resistance and the support levels. So here we see the support level, and here we see the resistance level of the market.
So do you only know whether it's support or resistance after the fact that it's been rejected at those areas more than once, or just once is good enough for you? Good question.
So can you please repeat?
So in identifying support and resistance, is it more of an after the fact, after you've seen a few rejections or market reactions to an area, or is one good enough for you?
No, this is not good enough. This is just the beginning to see how the market is going, how the market is working actually.
Okay.
So we see this market since 1991 till now has actually reached some high points, some very low points, but now this level and this level show us the place that actually the market has actually reached its lows and its highs. So after that, we begin to see like the trends, the small trends. So this is an upper trend, lower trend.
Monthly. So start on the larger time frames.
Yeah, this is a very large time, but this is for me to see.
So you have a telescope. You have a telescope on your trading desk.
The telescope, exactly. So we're going to 45 minutes. Yeah. So what do we see here? So here we see a bullish trend.
Okay.
So here we see a bullish trend and a bearish trend. We see a wedge over here. And so this indicates actually that it's actually not an indicator that it actually is going to happen, but it shows us the movement of the market since February and till now, till late October. Okay. So here we see the support and the resistance level of October. What happened?
Right.
What happened at this month. Yeah.
Well, there are a couple of fake outs, weren't they? It broke out. What did you do? What did you do when it broke out of that red channel and then it was a false breakout and got back within it? That was a tough trade, wasn't it?
Yeah, now we are at the false breakout. Yeah. So in my opinion, the way that I see it right now, I believe that the trade is going to fall back to the support levels again. But we need some indications here. So we'll check out first the Bollinger Bands.
Okay.
So let's check it out. What happens?
I know, John.
Okay. So let's take a look. So at the Bollinger Bands, we see that every time that the higher highs are getting actually penetrating the upper Bollinger line, actually the market going down. You can see here, yeah, or you can see from the lows to the tops what happened here.
So you look for like it looks like right now the bands are compressing a little bit. You look for the market to take out the upper and lower band and fade it, go the other way.
Exactly. So I never trade when the market is about in the middle of the mid Bollinger Band.
Okay.
Okay. So I will never take a trade like that, except other indicators were confirming that. But I will take this trade, or I will take this trade right here.
And that's a short to you right up here.
I will sort it. Yeah, I will sort it.
Okay.
As you can see, the trend at the moment is a bullish trend. It's a bullish trend. Yeah. So a bullish trend, you trade it, you actually short it. You never long it.
Okay, so you say the trend is bearish from last May. We're in a downtrend, threatening to break out, but you don't think it will.
Oh, no, I think it can go up again. It can go long again, but we need some time for that. So this time can happen in any moment, as long as the penetration of the upper Bollinger Band is actually continues. So this is why we will place some stops. So we don't want if we short it, we don't want the market to penetrate this resistance level. This is actually an indication that if it goes upper than this place, we'll actually long it.
Okay, so if you're short here and you would long it, do you reverse out of shorts when instead of just getting flat, you would go from short to long?
I will wait.
Do you reverse out, or do you get flat and then get long?
We will get flat.
Because you're saying you'd be short, right? Correct?
Yeah. Right now, yeah. I will wait actually to be short to go short. So let's see.
Okay.
Okay.
So you do anything? Go ahead.
Oh, no, please make your question.
Okay. What I understood you to say is it's a short here. It's outside the Bollinger Band, but you're wrong if it takes out the blue line. Yes. So my question is, if you're short here, do you just cover your short above the blue line, or do you go from being short to being net long by reversing out?
So there might be a false breakout. So I will place my stop loss around right here. But if this actually stop loss place were actually penetrated, and so my prediction was not correct, I will actually wait a minute to see what's going to happen in a little time from this, like in 2 days, 3 days, 4 days, see what happens. And then if I see that it's a false breakout, then I will wait and sort it again. If I will see that there's a continuation here and a reversal of the market, then I will long it. So this is how I will do it, if I understand your question.
Okay. All right, so I noticed on your longer term chart the downtrend that we're about to come out of to the upside that we've been in for a while. Do you compare different European bourses. For example, the DAX has made successive new highs. The FTSE has many European bourses have made new highs. Looks like the IBEX has been left behind. And
Actually,
is
no.
a relative weak one compared to the others. Is that correct?
Well, the way I see it, it's actually every single stock or index or whatever. I see it actually as by itself. I don't compare it. I never compare.
Okay. Yeah. So each one's an individual animal. Yeah, individual instrument. All right. That's pretty smart. Do you do anything in the currency arena, Evangelos? You pay attention to euro or?
I prefer to do stocks, to be honest. I prefer because I see opportunities there. I see instead of actually hunting a stock, hunting a forex currency or a stock, I prefer to be like an opportunist. So if you see that there's going to happen like a change of the trend, a reversal, something that will actually give you something more, like let's say more than your stop loss, not like 50%, something that will give you 60%, 70%, 100%. This is something. This is actually a trade that I will take.
Okay. All right. So you kind of like when you use the currency for a guidepost, like when the euro is weak, it tells you should be long the DAX, and then you look for individual opportunities in the German market, individual equities. So you use currencies as a guideline for direction, because normally a weak euro is positive German equities, and a strong euro kind of puts a lid on German equities. Am I reading your mentality correctly here? Your psychology?
Yeah, this is how I do it. Yes, this is how I trade. Yeah. Sometimes it actually I'm correct. Sometimes I'm not.
Yeah, that's
I can tell that every time. If you see on my Twitter my posts, some of them are big fails, some of them are big wins. You know, you can tell like mistakes that I have taken, you know, or correct things that I have done. So we are learning. We are going forward.
Right.
Yeah.
So you know, I don't follow your feed. I don't follow your feed that closely, but I have noticed on Twitter that when someone makes a call that does not work out, that is wrong, they get amnesia about that trade. So when you post a trade and it doesn't work out, do you post that it was a loss and how much of a loss it was?
Well, actually, I place my losses no more than 2% of my actual investment. So I don't want that.
But you admit, you know, most people on Twitter choke on these words. I don't know, and I was wrong. And when they make a bad call, they forgot they made that call conveniently.
Yeah.
So when you make a call on Twitter, do you say that was a bad call? I'm wrong. I lost money. Do you?
I was doing it. But at the moment, I place my stop losses and my targets. So if anyone is interested in to see actually what happened, can tell if yeah. So let's start from actually the trades that haven't been good to me. So most of the trades that haven't been good were actually emotional trades. So we don't need to trade like that.
FOMO, you mean fear of missing out, impulse trades. Are your best trades the trades that you plan the day before you put them on?
Yeah. I have done it.
Do you still fall victim to, you know what, this looks okay, I'll give it a shot?
Actually, no.
Okay, that's
good. At the moment, since I lost some money, since I saw some fails and some actually target wins that I had, so I compared those two situations and I said, so what are we doing now? Let's see for more indicators.
Right.
So an indicator will be like the lines that I have just shown you. or
just
to read the candlesticks. Yeah. So just to read the candlesticks. So everything compared together. Another indicator we can take is stochastics. So the stochastics show us at what time actually what is the place that that our trend has reached its points where it's going to be reversal.
Okay.
So now at the moment in this particular trend that we see right now.
So I'm familiar with stochastics. What does the red bar and the green bar mean on your stochastic? The vertical red and the vertical green bar. What do you use them for?
Those two you mean, yeah?
Yeah, those two.
So this one indicates that actually the lines here has been crossed, or has and so this indicates that the market is going to be a reversal. The market is going to reverse.
Okay.
It doesn't really actually mean that every time it's going to happen. So the more indicators we have, the more actually we can see in the market, the more we can be sure about it.
Okay.
So,
and are you a believer in shutting out all the noise and just trading what you see, or do you do any intelligence gathering? You know, I have a philosophy: surround yourself with traders better than you. Do you do that?
Absolutely. This is actually
and where do you do that?
So you can take part, for example, in social here. I'm looking for at the moment for penny stocks here. So there are people
you do it off of TradingView.
Excuse me?
You use the social aspect of TradingView. These charts are TradingView. So you look for ideas off of the social on TradingView.
Yeah, this doesn't mean actually that those ideas are correct, but there might be a strategy that I don't have in mind. There might be something, you know, we are humans, we make mistakes.
Right.
Sometimes there might be something that I haven't seen, or something that, you know, could potentially change the market or could potentially change my idea. But believing in your ideas is actually the reason why you take the trades, because if you listen to what other people are saying, you will never make a correct a trade or a correct decision in any aspect. And if you do,
I don't know. I mean, there are people like, for example, the team that I work with here, that you know, I don't like to be on the other side of certain trades. I know what kind of hit rate they have. But I know you came to for an interview. I suggest you join ForexAnalytix for your intelligence gathering.
Thank you very much.
Take a look at all the different research that we have here. I think it'll add value to what you're trying to accomplish. But I would say this: you've been trading for what, 4 or 5 years now?
4 or 5 years, not very regularly, but yeah.
Okay. And are you profitable, say, the last 12 months?
Yeah, I would say that, yes.
Okay. Well, then congratulations. And how long did it take you to become consistent? Now, did you have this breakthrough recently? Because it would be unrealistic to say that you had it from year one.
Well, actually, I can say that each period of my learning of of the stock markets had its ups and its downs. So when I was very enthusiastic at the beginning, I could actually do like it's actually very big, but I could say that I was doing like 25% per week, 20% per week. Then this very big profitable period had dropped, and so I was doing like -10. minus 20. I was like, what's going on? So there are periods that I have been good on trading. There are periods that I haven't been. Now the last 2 years, I'm not taking day tradings. I'm not doing day tradings. I prefer to observe the market. I prefer to be more sure on my positions, on my movements, on what I'm doing.
Okay, so you're trading less. Less is more, and more swing trades, position trades than day trades.
Excuse me, can you repeat, please?
Yes, that you're not day trading anymore. You're swing trading, position trading. You're trading less. Less is more.
I'm trading less.
Yeah,
And my
trade. And it's better for you, not as good for your broker, but better for you, is what you're saying.
Better for me, definitely. Yeah. So
okay.
I just see that if I take a trade from day 1 to day 2, this trade doesn't have as many indications as I want, except if it's a very profitable trade. So if it's like if you listen to that, a company, for example, is going to release a new product. This is a very good fundamental to trade. Or if you actually see a war happening, you know that the petroleum is going up or is going down in particular situations. So those are good trades to take for a very short term without looking at so many indications, because you see that there is a very big, the news about the situation are massive. So the more people will be panicked, the more people will be scared, or the more people will see opportunities.
Okay.
So as long as you can see a short wave, like a wave which will take the market up or down, this is very good for me. It's very good for me. But yeah.
Okay, Evangelos. So the only way that people can follow you is to know your Twitter handle. Is that correct?
Yeah, that's true.
Okay,
or if they ask,
go ahead.
Yeah, or if they ask me if they want technical analysis on a specific stock or index or whatever, they can ask me. I can give in a few hours. I can give my actually technical analysis and tell what's happening, what's going to happen. Yeah.
Okay, but they could contact you for that on Twitter, and your Twitter handle is @Vaggmar, which is @VAGGMAR.
Exactly.
Correct.
Correct.
Well, I want to thank you for your time today and sharing what you do, and good luck in the UK and good luck in your trading. I hope you finish the year strong and that pips rain down on you. So very nice to meet you, Evangelos.
Very nice to meet you too, Mr. Dale. So I see that on ForexAnalytix you're actually doing great, guys. Congratulations to that.
Oh, thank you.
I'm a follower of yours and of your ways. Actually, I can tell you guys you're very, very competitive in the market, and this is actually amazing that I'm interviewed by you. I'm honored by you. That's what I'm saying.
Oh my God! Well,
thank you very much.
You know what? I have this saying that the greatest traders aren't always the most famous traders. So I like to lift people up that maybe aren't as well known to give them a chance. Because if you can help people in our community, I want them to reach out to you. So I thank you for your time and appreciate the compliments, and good hunting, my trading warrior brother, Evangelos Margitis.
Thank you very much.
All right, buddy. Have a great week. Good luck into all the central banks and the NFP Friday, and keep in touch.
We will keep in touch.
All right, buddy. So that's a wrap for us, everyone in face. See everyone for Turnaround Tuesday. Tomorrow I have Samantha LeDuc with us. So looking forward to maybe there's going to be some fades on a strong dollar if that sets up tomorrow. And remember, most of all, don't just count your pips, count your blessings. See all my friends, trading warrior brothers and sisters, and the team mañana. Adios.
Adios. Ciao, ciao.
Adios.